Yeah, it's definitely that time of day again here. Boy, that time flies when you're having fun. Welcome back, guys and gals. It's Thursday evening. It's January 24th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders earn consistent profits using a simple three-step trading strategy that I teach and trade with all of our clients every morning in our trade room. We're opening up tomorrow morning at 8 o'clock Eastern Time, and my job tonight, and the goal of this video, is to find the most reliable trading opportunities setting up on our favorite markets so we're ready for Friday morning's trading session. And we're going to cover crude oil, S&P, NASDAQ, gold, and of course, we can't forget about that mighty euro. Opening up some charts here for us here this evening, starting off on oil. We've got three big clues on oil, but the most important thing about oil right now is combining two types of trading strategies. I have a trading range and I have an obvious bullish trend. So whenever I find myself in a situation where I've got two big components, a range-bound market and a trending market, both of them give me very important clues, and we're going to put that plan together on the oil here in just a moment. As we go over to the S&P here tonight as well, a lot of the same stuff. A little bit more range on the S&P tonight, but we still have that channel coming across the screen. I'm going to show us how to combine the channel along with this range here in just a moment as well. And of course, the NASDAQ is looking very similar to that E-mini tonight. Bull market into a nice flat trading ranges. You know, some people complain about ranges, but I love me some range-bound markets. We're gonna combine two basic strategies, right, for a super strategy for Friday's session. I got a great plan here on the NASDAQ for us in just a moment. Now, the easy stuff is done. The gold's going to be a little bit tricky. We're going to have to thread the needle on gold tomorrow, right? We've been buying low and selling high on this range here all week on gold, but now we've got this total buzz killer here, this big old trend line coming down right overhead. I want to buy this market. And I've got two trend lines on this chart right now. The big one and its little brother here, right? Try to figure out how we're going to use both of those trend lines, not as resistance, but as support to hopefully finish up this big measured move on the yellow metal tomorrow. I think we look good to go back to those highs here, but we got to find a good entry on this. And then, man, oh man, Euro, this is what an incredible week it's been on the Euro. Euro continues to rotate back and forth inside of this big old channel. You know, I talked about it last night. We thought we were lucky we'd get one shot off the high last night. Yeah, well, two shots off the high of that big channel. Man, a trader's dream on the Euro, but now look where we are now. A big, strong move down. I want to show you how to use this overshoot to look for an overshoot on the opposite side, because I know you thought I was crazy trying to sell the high. I know you thought I was crazy buying off the low. Well, I got another crazy idea, looking for a long and then maybe a short side if we have enough time here tomorrow, right, on this Friday session. All right, let's jump right in here. Before we jump into those charts tonight, though, before we put the whole plan together, I got a great plan for Friday's session. I can't wait to get into it with you guys. Before we jump in, though, I do want to make sure you never miss another video. The easiest way to make sure you never miss a video here at School of Trade is head over here to our blog at Sideways Markets and join our mailing list. Give me your name, give me your email address, and then hit that subscribe now button, and then check your inbox, because I'm going to make sure I send you a verification email to make sure you give me approval to keep sending you emails, right? Never any spam, obviously, but I'm going to send you only the good stuff, all the good stuff we put out every week here at School of Trade. Make sure you never miss a video. Now, don't forget, tomorrow morning, we're going to be in our trade room, 8 o'clock Eastern Time, Monday through Friday. If you can't be there with me tomorrow, the next best thing is look right below the video tonight, right below this video tonight on our blog, or it's in the description of the YouTube video. There'll be a big button there below the video to download all the charts for today's lesson. If you can't be with me tomorrow morning, the next best thing is to grab all those charts, follow that big link below the video on the blog there and grab those charts for tomorrow. And don't forget, if you have any questions about anything we cover in this video, if you have any comments, concerns, feedback, or if you have any ideas of any other videos you'd like me to comment, right, or create, make sure you drop me a comment in the comment section here on YouTube, and I'll make sure to get them answered as soon as possible. And don't forget, if you want to call anytime, I'm a real human being. My wife, Megan, and I, we run the entire business. I've got a small family-run business here at our corporate headquarters in Los Angeles. I promise no call center. Pick up the phone and call me anytime you want. I'll be happy to answer your questions, right, and go over all the options of becoming a client. So call that toll-free phone number if you have any questions along the way. So download those charts, drop me a comment in the comment section, but make sure, though, you join that mailing list. That way you never miss a beat here. All the good stuff we send out here on School of Trade. Let's jump right in. Tomorrow's a Friday. Yeah, finally Friday. Got a short week here this week, right? Because, of course, Monday was a holiday. Anytime Monday's a holiday, that Friday is usually a pretty darn good day. We're still waiting to hear more from China-U.S. trade talks. We're still got that stalemate in the government shutdown. Maybe tomorrow we'll get a little bit of a late week surprise. Who knows? But we're definitely keeping our eyes and ears open for any unscheduled news tomorrow. China-U.S. trade talks, right? And of course, the government shutdown. Those are the two top things we're watching here for tomorrow. We got Draghi out of the way today. What do we have on the schedule here for tomorrow? We got a bunch of news, as you can see. If you're in Europe or basically anywhere besides, right, the United States here, early morning tomorrow, 4 o'clock Eastern time, we get the IFO survey that will likely get markets, right, like, of course, the pound, right, the euro, gold be moving well off of that. Lots of different currencies and metals that will surely be moving off that IFO survey tomorrow morning, bright and early. If you're joining me tomorrow at 8 o'clock Eastern time in our trade room, we have a front row seat for the durable goods orders and the new home sales number coming out tomorrow at 10 o'clock Eastern time. Remember, a lot of the best stuff we're seeing right now is happening between 9:30 and 11 o'clock Eastern time. So that's been the sweet spot recently. Hopefully I'm wrong tomorrow. Hopefully it's a real big session for us. But again, usually when that Monday is a holiday, usually everything gets pushed back all week, and Friday tends to be a real explosive day. It's a Friday, so you want to make sure you get to it early, get in early, get out of there early, watching that time between 9:30 and 11 very closely tomorrow. Durable goods orders at 8:30, new home sales at 10. Keep your eyes open if you're doing this on your own, or come out and join me tomorrow morning, 8 o'clock Eastern time, right? And we'll wrestle these markets together. All right, let's jump right in. We have a lot to cover here tonight, and I realize I'm a little bit late to the party here today, so I apologize for being here a little bit late. Let's jump in here. 3 big clues. We'll go oil, S&P, NASDAQ, gold, euro tonight. And of course, if you have any questions, drop me a comment in the comment section below. And of course, don't forget, give me a thumbs up on the video too while you're down there. 3 big clues on the oil market. These are the same 3 big clues we're going to have on oil, E-mini, and of course that NASDAQ tonight. The first 3 charts are almost all identical. First big clue is bull momentum, right? Clue number 1, bull momentum. What does bullish momentum tell me to do? It tells me to buy at support levels. That introduces the second clue, the trading range on the chart tonight. Anytime I have a trading range in a bull market, watch closely. I'm going to draw the size of that range. I'm going to copy and paste it down, and that will give me a level of support. Copy and paste it down. That gives me another level of support. So we got a bull market for the first clue. Second clue is the trading range, right? Third clue is hidden channel. Let's draw that trend line off of those highs. Beautiful trend line. 4 tops of that trend line. Let's bring it right on down off of that low, right? And that gives us another level of support to keep our eyes open for tomorrow. So put all of these beautiful clues together. A bull momentum tells me buy at support. What support levels? Support level number 1 at 82. Support level number 2 at 53. What support levels? How about the hidden channel support coming up? And that, of course, creates this beautiful battle zone between that 52.80 down to that 52.53 area for tomorrow morning. So we know the market's bullish. I know I want to be a buyer. How are we going to buy, right, if this market pulls back here? If it pulls back for us, we're probably going to have to draw that trend line off of this high. And once we get that trend line coming down off the high, this is setting up for a gorgeous 2-legged pullback. Let's get this out of the way here real quick. You guys know that's the battle zone, right? So if we end up pulling back here, right? We're not pulling back here. I'm going to draw that trend line right down off that high. And then this, of course, incorporates that range expansion level down here, right? It incorporates that hidden channel level down here. Love that area, as I mentioned earlier. But how do we find the entry here? What I'm going to use is I'm going to use that beautiful two-legged pullback entry pattern, which we cover throughout our video course materials here at School of Trade. And then I'm going to look for that up and back down and try to use that trend line, right? Try to use that trend line. Now, we don't always get that pattern, right? We don't always get that pattern. That pattern is kind of the prime time pattern because it allows us to buy really, really low. And again, we call this the 2LP, right? Because two-legged pullback, one leg, and of course, two legs creates the pullback. We draw that trend line overhead and then use that trend line for the buy. But honestly, sometimes we don't get that pattern, right? That's a really low, right? Nice low buy off of that low. What if we don't get that pattern? Then what do we do, right? What if we head lower here? We come over to the moving average, right? What other options do we have here? We can look for that combination of a failure into a pullback. Now, boy, oh boy, do I love this pattern. It's a failure pattern off the moving average, right? Into a pullback pattern off that high. This is by far one of my favorite combination setups, right? We talked tonight about combining two big components, combining a range, combining a channel, right? The range gives us support. The channel gives us support. The direction gives us direction. So we know what direction, we know where. Now all we're trying to do is trying to get into this move now. Here's how it works. I'm going to wait for that move to go below the moving average right now. Once we get those sellers below the moving average, I'm going to wait for them to try again, right? It'll look like this. Okay, think about that one back here. One try, two try, right? That's what look back there. Bottom line is, I want to see us pull back one. I want to see us pull back two, right? Pull back one, two off of that moving average, and then that will set up what we call the failure pattern, right? That failure pattern will get things moving higher here, but I don't want to chase after it as it goes higher. I'll then wait for that pullback and look to buy from there. So if we don't get that two-legged pullback, the first pattern, right, the next best thing here will be that failure into the pullback combination. And then, of course, what do we do if it doesn't pull back, right? That's the next scenario. If it pulls back, we're looking for that 1-2 failure into pullback combination. Easy pattern. But what if it doesn't? You know, what if we keep on hanging out here inside of this trading range? Then what's my plan then, right? If we just keep hanging out here inside that range, then what do we do? Nothing really changes. I'm still watching that 82 range expansion. I'm still watching that hidden channel. I'm still combining those two strategies together. Now we're going to use the two-try failure pattern. Let those bears try once. Let them try twice. Once we have those bears trying twice below the low of that range, now we know we've got those sellers all committed. And now with the right signal candle now, with the right signal, right, we'll look to buy going right back up in. So let those bears try once. Let them try twice. If we keep going sideways here, the range says buy below the low of that range, and we'll go back up into that range after we see the two-try failure. Now, one more question. What if we don't go sideways? What if this thing just keeps on pounding higher, right? What if we keep on grinding higher up here? If we keep going higher, now this becomes a spike in channel. And what do we know about spike in channels? Spike in channels always tell us traps. Look at those deep traps, right? If we do get this market still continuing to be stingy and going higher, that's okay. Draw out that new channel. Find those prior swings. You know, we don't know enough about it yet, but we'll know more about that tomorrow morning. Find those prior swings and look to get in on whatever pullback, right, that we can get. So we talked about three basic scenarios. Scenario one was that failure, right? Get the pullback, that failure into pullback combination. Scenario two was we keep going sideways and we look for the 1-2 try failure. Scenario three, if it keeps going higher, what are we looking for? You got it, looking for traps, right? Find those prior swings and look for those traps, because at that point, right, it'll be all hands on deck. Everybody will be looking to get in, right, without the pullback. Okay, now I got to keep going here, but I want to give you a lot more information. If you want to learn more about two-legged pullbacks, failure pullback combinations, two-try failures, trap patterns, right, I want to teach you all about this strategy, but I got what, 4 more markets to cover tonight on this video. So what I'm going to do is I'm going to drop a link up here in the upper right-hand corner. I'll also put a big red button. I'll put a big red button down here at the bottom of, right, at the bottom of the website here on our blog. All of those links will give you access to our free trading class in the upper right-hand corner. Grab that link or grab that big red button below the video tonight on the blog. Register for the free course. That way you can learn all my favorite technical analysis. You can learn more about the 3-step strategy. And of course, you can see hundreds of examples of real patterns that we find every day in our trade room. So combining 2 basic pieces here, right? The range and the channel. We're bullish. I want to buy low. And now all we need is a little bit more time here, right, to get the right patterns. Let's keep going here. Over to the S&P here tonight. Looking at the S&P, same basic idea here. 3 main clues. 1 is the overall bullish momentum. The market's not that bullish, but there is a bullish bias. Going into 2, second clue, the trading range. Into the third clue, the hidden channel, right? Drawn across those highs, bringing down off that low. Now, what do these clues mean? The bull momentum, right? The first clue, bull momentum means buy at support. Now, where can I find levels of support? Well, one level of support is going to come off that trading range, right? Take that trading range, copy and paste it down, that's support. Copy and paste it down, that's support. Very easy to find support levels when you have a range. Just take the size of that range and just bring it right on down, right? It's relatively easy. The key, obviously, is making sure you have the right range. And I teach all about defining the right ranges in that free class I mentioned earlier in the upper right-hand corner. You'd be foolish, right, not to take me up on that offer. Now, the third clue is the hidden channel. That's also going to give us a level of support. And what I love about this hidden channel is it's just outside of that reach, right? It's just outside, you know what I mean? When we find ourselves, if we get the chance to get down to that hidden channel down here, it's going to be stretching those sellers thin, right? Nobody's going to want to sell down there. We should be able to get that nice buy going right back up into that range, right, tomorrow morning. So we're bullish. We want to combine those 2 strategies. One is a range strategy. One is a channel strategy, right? The channel says to buy off of that low. In a bull market, the range says, right, add those range expansions, right? The range says buy the range expansions back up. All right, so how do we do that now? What if it goes up? What if it goes down? What if it goes sideways? That's a good question. What if it goes sideways here? First things first, though, right? What if it goes lower, right? What if it goes lower? Goes lower, 1 try, 2 try, failure, back up into that range. Now, these come in all shapes and sizes. For example, this one back here, very small, 1 try, 2 try, back up in, right? Sometimes they go small like that, 1, 2, back up. Sometimes they come down, 1, 2, and they go really low, right? Lots of different variations to that 2-try pattern. You can learn all the details with that free trading class or use that big red button below the video on the blog here at Sideways Markets. Grab that free class. You're going to love every minute of it. So the first option here is on the S&P. We go down. It's 1 leg. Wait for that pullback to the moving average, right? It's that second leg. Let those 1, 2 off of the moving average. Once we have those sellers all fully loaded up, right? Now we know where the stops are. You know, think about it. Stops will be hanging out right above that high. And so we can then look for that combination setup, that failure into pullback and go from there. One of my favorite combinations. We look for that every morning in our trade room. It's a 2-try failure pattern, right? Along with that pullback pattern. Now, maybe we get really lucky, right? Maybe we get really lucky. Maybe this thing sets up with, right, a 1, 2-legged pullback. Maybe we get really lucky. We get the 1, the 2, draw that trend line down, right? And it's still, again, combining 2 strategies together. It's the 1, it's the 2, and all you're doing is you're simply buying lower because you've got that trend line, right? Could this also be a 2-try failure? Absolutely it could, right? It could also be a 2-try failure, right? Into that pullback. Yeah, there we go, right? Could easily be 3 different setups here. 2-legged pullback, into the 2-try failure, right? Into that hidden channel pullback, or into that pullback, right? To that moving average. Beautiful potential on this. I just want to see if we can get the pullback here right now. Now, what if we don't get that pullback? If we don't get the pullback and we keep on rattling inside of that range, this is always the hardest part, right? You don't want to fiddle with the middle of this range. And because that range is so darn tight, like a tiger, right? It's so narrow, you don't want to trade inside of it, right? I mean, it's not worth it. It's not worth it. The problem is when there's not a lot of meat on the bone, you don't get a lot of big whales, right? When there isn't really any big meat on the bone, you're not going to get any big animals going after it, right? There's no professionals trading inside those small ranges. We've got to get out of that, right? So if it goes sideways like this and keeps on chopping around, right? It's 1, it's 2, and it's back up. Let those sellers try once, let them try twice. And again, you'll see variations of this, right, on different scenarios, literally hundreds of different, right, examples of that as part of that free trading class, which is linked up in the description of this video. Now, we know what we're going to do if it goes lower, right? We know the plan if it stays sideways, okay? What if it goes higher? What can I do if it goes higher here, right? If we go higher here, can I sell this? You really got to be careful selling it as it goes higher, because let's not forget, we talked about in last night's newsletter, right? Let's go back to last night's newsletter. And if you remember from last night's newsletter, we gave you guys a clear bull target up at that 26.53. There's absolutely no reason why that 53 level is still our magnet. I think it still is. So really what I'm looking for tomorrow is I'm trying to kind of play this by ear. Listen, hear me out for a second. As we go higher, right? As we go higher, it's really going to come down to the condition of the breakout. For example, let's say we just kind of mosey our way higher here, right? If we mosey our way higher here, in other words, we're not getting this strong run higher. If it just kind of trends its way higher here, I'm going to look for the 2-try, the 1 and the 2, and try to fade this thing right back down in. I'll look for those buyers to try once. I'll look for them to try twice. This is the opposite of the 2-try rule at the low of that range. But if I see these buyers trying once on the pullback, twice on the pullback, I'm going to look for that nice strong signal and just toss this sucker right back into that trading range. And we see this a lot during range-bound markets. However, right, we may see the market really jump. And if it really jumps, right, if this thing really runs, we talk about this quite often. Anytime we see a strong move in one direction, you can probably count on another leg higher. The problem is going to be if this thing really runs, if it really, really runs, right? I'm not going to want to buy high because, of course, we're going into that big bull target. So remind me, guys, what is the best pattern to use when I want to buy, but I'm concerned about buying too high? What's the best pattern? Let's see if you've been keeping up with things this week. Homework? Yes. And the answer is a trap setup, right? Trap for the win, Bob. Absolutely. So we have we've got that little trap set up. That will be the setup if we get that strong breakout. But remember, it's going to be a very strong move higher. It's going to be a real strong move higher if we're going to get the ability to buy that trap and finish off that bull market, right? So if we just kind of lazy move our way up here, I'm going to look for that 1, that 2, and sell it back in. A little bit tricky. It's a little bit tricky. That stuff's not that easy. So you got to make sure you're paying attention tomorrow morning. And then, of course, if we get that strong move, right? I mean, this thing just blitzes higher here. Now keep your eyes on traps, right? And look for that trap as we go. This will take a little bit of experience, and that's exactly why our trade room tomorrow morning is such a great spot to be there with me. 8 o'clock Eastern time. You can learn more about membership on our website at schooloftrade.com. And again, don't forget, I teach all of these basic strategies right inside that free trading class, which is linked up there in the upper right-hand corner. Now, what would a successful reversal look like right now? Yeah, curveball, right? Reversal. Yeah, this market could reverse. It's the S&P, right? Probably not going to happen, but it could reverse. What would a reversal look like? A reversal, we need to see what we call the 1, 2, 3 reversal, or in this case, it'd be the 1, 2, 3 breakout as well. What does that mean? Well, I'm looking for a 1, strong move against the trend. 2 is a pullback now to the moving average, and 3 is going to be a strong move off the moving average. Okay, that's the trick. We get a bull momentum in the market right now. With that bullish momentum, I don't want to try to sell unless I'm at the top of this range and I see that 1, 2, right? That nested 2 try, which again, I'm going to teach you a lot more about inside of that free trading class. If we get a strong move down, we pull back to that moving average. Then careful, careful, careful. Don't just try to sell that first pullback. Look what happened back here. That was a real strong move down too, right? So you can't predict those breakouts. You know, how would you know the difference, right? Good question, right? How would you know the difference between a breakout and a failed breakout? You have to assume that every pullback is going to give you that failed breakout, right? Every time it pulls back, you've got to assume in a range-bound environment, you've got to assume that breakout's going to fail. Make them prove it to us. If they get that breakdown now, 1, 2, 3, if we get that 1, 2, 3 and that third leg on strength, now we're going to mark up that low. We're going to find that new hidden channel, and that hidden channel now, right, becomes our best resource. We're going to try to sell off the top of that channel. Don't worry about this hidden channel at that point, okay? Because it's just a line at that point. It won't mean very much. If we get that 1, 2, 3 and this market dumps, don't chase after it. Find that swing, find that hidden channel, and we're going to sell right off that high, right, of that channel. We talked about this last night. Trading is one of those businesses where you've got to really build those discipline muscles, right? Discipline's one of those tools. You either use it or you lose it, right? It is a muscle. If you're not practicing discipline to wait for these types of reversals, because you can't predict them. You can't predict them, and you don't want to gamble away all your hard-earned cash. So wait for the reversals. Trust me, you'll get much, much better results if you wait for the reversal, then trade the reversal. I know we all want to try to predict these big tops and bottoms, but it's just not a very reliable strategy, especially in a range-bound environment. So the S&P looks great. S&P looks great. How about some NASDAQ right now? NASDAQ is almost identical here, right, on the S&P. 3 big clues. One is this bullish momentum, right? Definitely seeing a bullish overall momentum. That tells me to buy at support. Second clue is that trading range, right? Where can I find levels of support? Take that trading range, copy and paste it down. Take that trading range, copy and paste it down. That's where I can find some major levels of support. And then what else can I use? Let's draw that hidden channel, right? Combine these two strategies, combining a range with a trend strategy, right? And we get something beautiful here to look for those buying opportunities now, right? Off of that low. What I love about this is you can combine the channels, right? Which is a trend following strategy, along with the range. Obviously the range takes precedence, but man, oh man, is that looking beautiful for that buy right around that combination, right? Of those levels of support. So we know the basic idea now. Now what's the plan here from, right? What's the plan from here? Well, what it looks like is it doesn't look like we have to worry about any falling resistance right now. So really at this point, the plan's pretty simple. Let's get down as far as we can go. Like literally, right? This thing could go all the way down here and I'd still be looking for the buy going back up. Remember, it's not a bear market until what? 1, 2, 3. So even if we collapse here, when it pulls back to that moving average, it's got to hold and go. Okay, I don't care how big that pullback is. Now, a couple scenarios you're watching for here. One is a relatively shallow pullback. We get a relatively shallow pullback. Look for that combination of a failure into pullback setup, right? It's a 2-try failure, right? The failure trigger is above that high. And then, of course, the moving average is right there. The moving average is the most important part of that, right? Make them sell off that moving average. Make those bears wrap that rope right around their neck, right? Let them hang with it, right? I know it sounds bad, but that's the easiest way. You know, many years ago, one of my first trading coaches, you know, he kind of made me aware that the easiest money you're going to make in trading is going with the momentum, incorporating a level of support or resistance, and then finding an opportunity when the opposite side is stuck and has to get out for a loss. Think about that, right? 3 things: with momentum, okay, with momentum, incorporating support or resistance, like the low of a channel, and then where can I find, and I know this takes a little bit of vitamin E, right? Empathy, that secret weapon, possibly the most important skill that you can develop as a trader is empathy, by thinking, okay, if I didn't know what I was doing right now, right? If I didn't know how to trade and I was a seller here trying to sell this, where would I be in trouble? Where would I get in? Where would I get out, right? I know that sellers are going to try to sell those pullbacks. And when they get stopped out, they're going to fail and price is going to go right back up into that range again. And I'm going to keep on hitting that button over and over and over again until something changes. So of course, we'll look for that failure. And then, of course, once it fails, we don't want to chase after it. That's not a very good trade because you're buying high. Remember, buy at support. Go with momentum, buy at support, grasshopper, right? Buy at support, pull back, and then go from there. Wax on, wax off. Now I get it. On and off. Got it, right? So hopefully that makes sense. With momentum, incorporate support. And then where can I get that point where the sellers are starting to get pinched, right? They're starting to get some pain. And when they get pain, what's going to happen? They're going to get me out, right? Wave that white flag and that market will rally higher. Guys, we talk about using empathy all the time in our classroom sessions because it really is the vitamin E, right? It really is one of the most important things you can learn, right, as a trader. Now, don't forget that 2-legged pullback. Doesn't look like it right now, but we might get lucky on it. I say that because it's always a really easy pattern, right? Once we get that trend line. So watch that trend line, right? For that little 2-legged pullback. What if we keep going sideways here, right? If we keep going sideways, nothing changes. 1, 2, failure, pullback, back in, same stuff, right? Now, the other challenge though is what if it goes higher, right? What if it goes higher? Now, earlier this week, we talked about the market's objective and how important it is to know where the objective is. We are knocking on the doorstep right now of that bull target. So it's very difficult for me to give you the same type of guidance as we talked about on the S&P. Remember, the S&P has a lot of space to go higher here, right? NASDAQ, not so much. So if you miss that lesson, right? If you miss that lesson on market objective, right? What I'll do is I'll put a link up here for you, right? I'll link over to that video for you in the upper right-hand corner there, and you can watch that previous lesson from earlier this week. Because what you don't want to do is you don't want to buy into the objective, right? You don't want to buy into that objective. What you want to do is you want to get through the objective. Show me you mean it, right? Give me that 1, 2, 3 breakout. Give me that run. Now, I know we don't want to miss the move. I'm not trying to miss the move. I'm trying to increase my winning percentages. I'm trying to increase the odds of my success. I'm trying to increase the reliability of that pattern. Draw that trend line, find that new channel, and we'll keep the party rolling as we go higher here, but I'm not going to buy into that high. I'm not going to buy into that high, and I hope you don't as well. So wait for the break through it. This same strategy, of course, will apply on the S&P as well. All right, guys? So don't forget, right? Don't forget, same basic plan. Buy low. Do not buy high. It's a little bit different than the S&P where you got that ceiling up there at 67.25, right? Up around these highs, and you don't want to buy into it. And again, same basic idea. If we go up, 1, 2, and right back down again, we can look for that same basic 1, 2. We call this a nested 2 try. If you're going to go against the trend, right, and want to sell this thing back down again, 1 and 2. We're going to talk more about this version of the 2 try pattern on the euro in just a few moments here, so make sure you stay tuned on that one. But NASDAQ looks great for both buy and sell side. And again, like I said earlier, grab that free course in the upper right-hand corner, and you'll learn all about this strategy. Let's keep moving. Next up here on the gold. All right. We might want to kick the kids out of the room for this one. This one's going to get a little bit PG-13 because this one's got a little bit of blood and guts involved in this one because as you can see, we're still holding this range right now. We've got three main clues on gold. First big clue is the bull momentum. Wait a second. Bull momentum? What bull momentum? Aren't we making lower lows right now and lower highs? Isn't that bull momentum? I mean, isn't that bearish? It would be if you were reading the old school trading books, but that's not how we define momentum. We define momentum with the moving average. Okay, follow along here for a moment. Notice how the market goes lower and jumps away from the moving average, right? That jump off the moving average tells me the bears take control. Okay, notice how the market slams higher, jumps off the moving average. Bulls take control, right? Bears take control. Bulls take control. Notice how it jumps off that moving average. Okay, notice how the market jumps off the moving average as it goes higher. What does that do? That gives the bulls control. Now, why is it important? Because you've got to show me now, sellers, that you've got control here. Have the sellers jumped away from the moving average like they did back there and back there? No, they haven't. That tells me the bulls have control right now. That tells me the bulls have momentum on their back. So if you're still using the old school technique of lower highs and lower lows, I hate to break it to you, but you're going to probably find yourself on the wrong side of a lot of trades doing that. I made that mistake for many years, thinking that lower lows and lower highs was all that mattered. It doesn't matter. Well, I mean, it does matter because there is a trend line coming down overhead, right? But the big deal right now is this is bull momentum, right? Because the last time we had a big run, it was bullish. The bulls clearly took control as this market ran back into that range. The difference, though, is unlike the other previous times, right? The sellers have yet to take this control back yet. That means the buyers still have it. It has nothing to do with the lower highs and lower lows. It has everything to do with how the market's reacted to the moving average. And it doesn't matter what moving average, okay? So it doesn't matter, okay? You could use any moving average you want, any variation you want, simple, exponential, it doesn't matter, right? Pick one, okay? I've got my favorites. If you want to learn all the tools, grab that free trading course, upper right-hand corner. I'll go through all the tools we use, all the stuff we use here at School of Trade, but don't get wrapped up in what specific type of moving average is. It doesn't really matter. All that matters is if I see the bears running away from the moving average, they take control. The bulls take it back. The bears going to take it back. They take it back. But then the bulls grab it. It's up to the bears to grab it back. And I know it sounds ridiculous. Really, Joe? Bull, bear, bull, bear. I mean, what is this? But look at the chart, right? I'm not making this stuff up. It's a range-bound market, so the bulls and bears keep bouncing back and forth. Now, the last time we saw a nice strong run was the bull side. It's up to the bears to take it back. And as of right now, I haven't seen that yet. So momentum is still bullish, which means I want to buy at support. That's where the rub comes in, right? That's where the rub comes in. Where can we find a level of support? Well, let's not forget, this is one big range. Now, I know you guys are experts on ranges by now because we've seen a lot of these ranges, right? Take the range, copy and paste it up. That creates resistance. Take that range, copy and paste it down. That creates support. So we know we have a support level down here at 78.1. That creates the bottom of that battle zone. We also have resistance up overhead at 86.5. Okay, so we know we're bullish. We know we want to buy at support. Where can I find support? At that 78.1. Right? We can also find support in a couple other places. For example, if I draw this trend line down, this hopefully looks like that two-legged pullback that I was talking about earlier. Beautiful. And that's really what I'm looking for tomorrow. I'm going to try to get that trend line to give us a chance to buy off of that support line, the trend line coming down. And then here's the tough part. Here's the tough one. Because in my opinion, looking at this chart right now, the big reason why we're not back at that high right now is because of that trend line coming down overhead. We knew about it last night, right? And it made for a perfect target for the buyers today on the gold. You can easily see what happened, right? You can easily see what happened. We come crashing lower, one try, two try, and right back up in. Right? Two try rule strikes again. Same pattern we've been talking about all week long on this gold, right? So the buyers, they get their one try for the bears, their two try for the bears, right? And wham, right back up. Oh, and by the way, a little pullback just for giggles. We've seen that pattern before a couple times on this video tonight, haven't we? Right? Two try failure into pullback. Like I said, I'm not making this stuff up, guys. You can see these patterns all the time. So now the hurdle is this. Nobody wants to buy into that trend line, and for good reason. So here's the challenge. I don't want to trade inside this range, right? So the challenge becomes here now, we're going to have to either A, get up and down so I can use the smaller trend line. I'm really hoping that's what we get tomorrow, because that's going to make it a whole lot easier. Because if we don't, this could get bloody tomorrow morning, because with that trend line coming over, we've now got to get up and then wait to get it towards the low of that range. Not going to be easy. And I'm sure by the end of the morning tomorrow, we might have some real bloodied up bulls and bears tomorrow because of these trend lines as we go. Now, there is a chance this will separate into a smaller range. So I am going to be watching for a smaller range. You know, sometimes what will happen is a market will be trading inside of one range, and then it will kind of split off and find another range, right? That happens all the time, especially in some of these kind of perma range markets right now we're seeing on gold. But the bottom line is I'm going to keep my eyes open on that, right? We'll keep our eyes open on that. If that does become a range, how do we trade a range? 1, 2, back up in. How do we trade a range? Yep, you got it. 1, 2, back down in. So if we do see this thing turn into a smaller, not a smaller range, right? But if we see this thing go and start going sideways here, then we know our plan changes. It's sell high, it's buy low, and what's the pattern we want to use? It's that 2-try failure pattern, which we talked about extensively here already. So what I really want here for tomorrow is I want to get this thing pulling back a little bit lower, get up, get over, because then that will take care of the 1-2 try rule. And then maybe we get lucky. I don't know if we're going to get this or not, but maybe we get lucky and we get that pullback. The problem is, though, is that if we get that pullback, right, that pullback right there, you know what I'm going to say. You're going right into that trend line again. So you really got to be careful down here. I really want to get this thing up off that low, right? I want to buy as low as possible, because I don't want to buy into that, right, into that trend line. Okay, now, if we go higher here, right? Let's say we go into the trading range now. If we go into that trading range, now we've got to be careful, because that trend line is still going to be there. And if we get stuck below it, it's going to be tough. So if we do get that 1-2, we're going to have to see, what I'll look for is the up, back, and go. Just remember to use the trend line as support. Okay, I'm not a breakout trader. I don't recommend you trade breakouts either, right? So I'm not trying to take the break of that trend line. I'm trying to take the break, wait for the pullback, and then get in from there. Okay, I know it's not going to be easy tomorrow. This is definitely going to be one of the harder markets to be trading tomorrow. The easier part would be we go down and back up, right? Again, with the 2-legged pullback, as we've talked about many times already. Or we go in, wait, and then use it again as support on the opposite side. But again, you're buying the low of that range. Last scenario would be, how do we sell this market tomorrow? It's got to go up, 1, 2, and back down, 2-try failure, or we go up and then look for that nested 2-try, 1, 2, back down again, right? Lots of examples of that. Good example here. This was an example of both. This one back here, you had the 1, 2 back up, right, into that little pullback as well. You also had a strong move down into a 1, 2 back up. So there was both examples of major 2-tries and nested 2-tries earlier in today's session. What will we get tomorrow? I don't know, right? 1, 2 back down, or strong move up, 1, 2 nested 2-try, right, as we go back into that, right, as we go back into that trading range. How would we break out of that range? What would it look like? Strong move 1, pull back 2, strong move 3. If we see a third leg and we're pushing through the high, I'm good to go on that. We'll call that a breakout. Probably not going to happen, but definitely could happen tomorrow if we get the right momentum shift. We'll look for that new channel. We'll try to buy off the low of that channel there. But again, make sure you've got some significant strength on that third leg, right? So it's 1, it's 2, and it's 3. It's got to give you that real strong third leg, or else you're going to be the sucker holding the bag, right, when the bottom falls out of it and collapses back down into that trading range. If they don't get that run through, it's not going to be worth your time. So gold, stay away from buying into that trend line. Get long off the lows. If we go back into the range, be careful with that trend line. And again, up 1, 2, and back down. Looking forward to a great day tomorrow, but gold is probably going to be one of the uglier ones, right? So you might want to keep the kids out of that office tomorrow morning, right, while you're trading it, right? Or they might hear some profanities if we're not careful. All right, wrapping up tonight here on the euro. Man, this euro has been gorgeous here all week. Still relatively low volume. Today, of course, was Draghi, right? Super Mario came out and moved all this stuff around for us here. But, you know, like I always say, it doesn't matter what's happening. Trust the chart, and we continue to see this big bear channel, right? And, of course, whenever we have those big, wide channels like we're seeing right now, we're selling off the high, we're buying off the low, we're selling off the high, we're buying off the low. Very important that you understand this is a channel that is wide enough and flat enough to trade both sides. Not every channel will be, right? If you see a channel that looks like this, right, you do not want to trade both sides of that type of channel. It's too narrow and it's too steep, okay? But you get a nice wide channel, right? Nice wide, nice almost flat channel now. Yo, yeah, I'll sell off the high, I'll buy off the low, I'll sell off the high, because there's so much space here, right? I can buy on the way up, I can sell on the way down, right? There'll be two-sided trades going on in that environment. So here we are on this channel. It's a gorgeous channel. Okay, now, 3 main clues. One clue is the momentum, right? This is a bear momentum. This is a scenario where we have an obvious strong move down. Now, what does a bear momentum tell me to do? It tells me to sell at resistance. But here's a good question. What resistance? Look at this chart. There's zero resistance on this chart anywhere close, right? We've got a level there, a level here. And really my goal is to see if I can make some money on the way back up to these levels. Now, I want to sell at resistance, and the big problem is I'm not at resistance. I'm at support. In fact, I'm over support. I've overshot support. Okay. And one of the easiest reversals you're ever going to find, right, is a double overshoot. A double overshoot means 1 leg through, 2 leg through, bing, right back in. Okay. I will be watching for that pattern in the short term. That will be a very good setup if you're in Asia or you're in Europe if we get that next lower low. Okay, next thing here is, right, next big clue is that strong bear run. Now, strong bear run is a really important piece of this puzzle. So what's the difference? What is the difference between a bear momentum and a strong bear run? A strong bear run tells me that as soon as we get to resistance, we are going to see sellers here. So it kind of mentally prepares me that I need to think that through before I start being a buyer, right? A bear momentum tells me that I just got to wait for a specific pattern. That strong bear run tells me I really got to think about where that pattern is going to be, because I need to anticipate as soon as it pulls back to resistance, you are going to see some sellers coming in here. It's going to happen, right? So we've got a bunch of clues here. They're all pretty bearish. I want to be a buyer though. Right? And before you turn off the YouTube video tonight and go, this guy's gone crazy, right? I'm not going to buy. He wants to buy this thing. Look at this, right? But before you go turning off the channel tonight, right? We've already seen big moves down, right? End up right back up again. So how do we do this? How do we get into this trade right now? One is that double overshoot. Okay. Again, when you see that overshoot of that channel, look for a lower low. And then what I really hope we get is the 1, 2 in. Okay, that's the trick. Once we get that lower low, okay, that's going to give me that double overshoot. 1, 2. Now, sometimes, I'll be honest, sometimes these overshoots, they keep on going. And we're going to plan for that in a moment. Right? So at that point, if we get that double overshoot, now the next thing is let those bears try once, let them try twice. Right? Not big tries, right? Red candle, lower low, red candle, lower low, bingo, buying right back up. Now that should throw some gasoline on the fire, right? We should see a nice short covering rally as we go higher from there. But what if we don't get that, right? What if we don't get that double overshoot? Okay, what if we just keep going higher here? If we keep going higher, that will count as the first try. And then I'm going to wait and see if we can get that sell up inside this 13,800, 13,700, right? You'll notice it's about halfway, right? About halfway. That's probably where you're going to see some more bears coming in. That's why I say it's important. Remember, we get a strong bear move down. So while that strong move down is there, we know we're going to have some sellers coming around the battle zone there, right? And now I can look to buy right into those stops. Let those bears try once. Let those bears try twice. It's very similar to the double overshoot, but this one now, because we're higher and I'm playing into that sell zone for the bears, I want to wait for those sellers to try, and then I can buy right into their stops. See, the problem is if I try buying back here, right? If I buy this one now, right? If I buy that one now, for all I know, right? If I buy this, thinking now we're going to go higher, for all I know, these bears will come in and run. They'll ruin my afternoon, right? They'll come right in and smack me out here. Again, because of that strong move down. That's why I made a point to put that on there, right? It's bear momentum, but there's also a strong move down. It's important. Okay, because that strong move down tells me at some point the bears will come hunting for my picnic basket, right? We'll see if you guys get that inside joke, right? So the bottom line though is, I must have been a toddler when that cartoon went off the air. He loved those picnic baskets, didn't he, guys? Yeah, absolutely. I'm sure most of you guys know what I'm talking about. If you don't, that's because you're not old enough. At this point, though, 1, 2 in that battle zone. Then again, right? I'm looking for that run back up as well, right? That run back up as well. So we go down 1, 2, and then up from there, right? 2 try failure, back up into that range. And then remember, right, if it does just tear higher here, right, if this thing just runs higher at that point, if this thing's just gassing it going higher, what do? We look for traps, right? Look for traps. So if this thing just gasses it right through and starts ripping higher like this, trap, 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 trap. On a slower time frame, it'll look like that, right? It'll start hauling and then you'll trap, right? Just a little pullback. That's all you'll be able to get when you get that short covering rally. We've talked a lot about short covering rallies, right, on this video here this week. All right, now, what if it goes lower? Could it go lower? You can do anything it wants, right? What if it goes lower here? If it goes lower, we know where we're going. We're trying to get that big round number at 13,000. Okay, what's the plan though? Make them prove it. 1, 2, 3, make them prove it. Find that low, find that channel. You know what I'm doing. Hidden channel, right? Selling off that hidden channel high. Okay, so make them prove it. Get that strong push through. And then we can find that new hidden channel. And the target, of course, is that next big round number at 13,000. The euro loves these round numbers right now. And if it rejects off 14,000, right, it's going to 13,000 coming up next. My money, though, right now, my money's on the long side for tomorrow, right? I'm looking for that double overshoot into that 1, 2 in, or that 1, 2 up, back up, or if it starts ripping, right, start looking for those traps, right, as it goes back up to retest the high. And then, of course, as we get back to that high, then, of course, it's the 1, it's the 2, it's that nested 2 try that we've talked about quite a bit already on this video. Guys and gals, man, what a great week it's been. Like I said, most of the action's been happening between 9:30 and 11 o'clock Eastern time. And boy, oh boy, I cannot wait to see you guys tomorrow in our trade room. Don't forget, we open up our trade room every morning, 8 o'clock Eastern time, where we execute the 3-step strategy with all of our advanced members. I'd love to see you there with me, right? I provide all the classroom sessions, all the tools, all the cheat sheets, all the checklists. All I need is you. We open up at 8 o'clock Eastern time, and you can learn a lot more by grabbing that big button below the video tonight, right, and joining our free trading class, or heading over to the website at schooloftrade.com and registering as a brand new advanced member. Any questions? Drop me a comment in the comment section below. Call that toll-free phone number right next to my ugly mug. And don't forget, I'm always standing by on live support, right? I get you covered anytime you need me. Now get out of here. Get some rest. Big day tomorrow, bright and early. We'll see you guys there. Remember, early in, early out tomorrow. It's a Friday, right? Make your money and get out of there tomorrow. And I will see you guys same place, same time, same place. Not tomorrow night, no Friday night newsletter. Next Monday, get a full week ahead of us, right, for that last week of the month of January next week. I'm excited for it. Hope you guys are as well. Hope you learned something. Hope you earned something with it. And hope to see you guys here next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.